or maybe a little higher is basically what Mitesh is saying on the index, and of course those individual trades as well. Deepak Shenoy is founder of Capitalmind, is joining us now to take some questions. Deepak, Friday was pretty sharp, right? I mean, pretty sharp and swift on the way down, but today back up, right back up 100 points on the index. So that was the question. It was just a thought actually, whether the market can completely ignore global markets going down, and then when everything becomes a little okay, participate in the upside as well. I mean, what should not hurt should not help as well, but maybe it does. Your thoughts?
Yes, I mean, Prashant, to be fair, we've actually outperformed quite a bit on the in the current year. So 2022 itself, we are up, I think, or we were up till Wednesday of last week. So I don't know what it is as of Friday, but the US was down some 20% for the year. So there is a relative difference. And part of that might be bridged by a few days like Friday, where you have a minus 2% D. Excuse me. But on the long term, I think, so our fundamentals are much better. Our inflation is relatively under more control. In 2 or 3 months, we might see much lower numbers because we had a spike last year. So the base effect comes in. We also have much lower impact of wages and demand actually eating into our inflation compared to food and fuel. And that the food and fuel part is also moderating fast. So I think macro-wise, India is doing better. The stock markets, of course, are driven by liquidity. So if there is a big crisis in the West that drives away liquidity, and we'll know, that in the rest of the year, then India is going to definitely be affected. So I think while our fundamentals are good, we are still going to be slaves of liquidity when it comes to our stock market. So have to, keep a close watch on liquidity more than we are on fundamentals right now.
Okay, all right. Hi, Deepak. Afternoon. I wanted your view on the QSR space. I just put out a note on, Yum Brands franchise, those two companies, as Devyani as well as Sapphire. There was a valuation gap. Some part of that is already done in terms of a catch-up. But your view on the theme, that is on the QSR theme, would you stick to, say, the Jubilant FoodWorks, and the likes, or would you look at a couple of these companies? And if any view on Sapphire versus Devyani?
So I think Sapphire, Devyani, and Westlife are probably, more interesting candidates than Jubilant, but Jubilant is a better managed company, at least from the looks of it overall. Of all of them, we like Devyani the most, though honestly, I haven't got any investments in this space. So when I say I just mean I want to invest in them. But the space is really tiny right now in terms of market cap in comparison with much of the rest. There is a growing long term, I think India will continue to demand or create, accept the demand of QSR, specifically these brands, and whether it's McDonald's or KFC or Domino's. In all probability, these will scale to much higher levels in terms of revenue. The problem really is valuation, and I feel that the valuation of some of these players, including Jubilant, is probably on the higher side, and therefore does not give too much room. So if the valuations were to come down to more meaningful levels, barring Westlife, which I think is relatively small, so I think we might participate better in them. I think the space is great. It's not very healthy. It'll possibly, if you're buying them, also buy some of the hospital and pharma names for the long term, because whoever eats more of this is going to end up with that. But I do think, from an investor's perspective, speaking without the morality factor in mind, these actually have great long-term stories.
Okay. Well, just Canpin Homes, of course, is the other stock which is in focus. There's been a lot of buzz about that stock. It's down about 7% right now, most of which has come in the last hour of trade. Deepak, hi, good afternoon. Any thoughts on Canpin Homes?
It's strange, Anuj. I haven't seen the fall. I don't know if anything fundamental has changed. It's a very simple story, Canpin. It's salaried employees that buy homes. More than 90% is salaried. They have very little builder exposure. Fairly well managed, and conservative in terms of accounting. But beyond that, the growth wasn't very visible here. We're looking at even overall banking space, the number of priority sector loans to housing has actually been dropping versus non-priority sector has been rising at 20% plus. So a bit of a slowdown in the space at the moment. So not keen on investing here, but we'll see. Maybe something fundamental has changed here. I haven't seen the news for the current fall here.
Okay, sorry. Let's just move on. Escorts Kubota is a stock that's in focus. It's hit a fresh all-time high as well. Now, keep in mind, after the open offer is over, it's a stock where the float is very limited. I mean, just between promoters and institutions, you add up and a couple of HNI investors, it adds up to around 92% or thereabout. This morning, of course, we had the management. Sonia is here with the key takeaways. Sonia?
So, Anuj, if you remember, a couple of days ago, Escorts announced that they will be amalgamating their JVs in order to come out with a simpler, cleaner organizational structure. Everything will now be under one umbrella. Now, we spoke to the management today, and there are many positives that came out from it. Now, these JVs which they're combining are currently loss-making, but they said that these JVs will become profitable by FY24 itself. So, clear timeline was given for profitability. Not just that, they also mentioned how the big trigger for the company here on will be localization of engine production, which they have kicked off, and this will take place over the next 2 years. Now, what this will do is bring down their costs drastically. They are expecting a 20 to 30% fall in costs over the next 2 years, and that's something that the street is factoring in. When asked about the overall business, they said that the months of September and October are expected to be blockbuster in terms of industry demand. And now that Kubota's stake has gone up to now about 53.1% now, Kubota is bringing a lot to the table in terms of better exports, better geographical reach for Escorts, and the Escorts Kubota JV will profit from that, and hence the stock has moved up post the positive commentary from the management, sitting at a fresh 52-week high as we speak.
Okay, well, actually, M&M is the other stock which is up quite a bit. Sonia, why don't you tell us about that as well?
So, there was some news flow in the morning, right, where the Mahindra Group has decided to now sell 30% of their stake in the renewable energy business, and they will be creating an InvIT eventually, where they will pump in the money into that InvIT and then go and list those assets in the renewable energy business. Now, the management in 2020 had said that they are looking to, unlock value for shareholders in multiple subsidiaries, if monetize assets over there. And this is one of their steps to clean their legacy businesses as well as focus on their core business. So this is, of course, one reason. But the other thing is CLSE came out with a note this morning where they have a very aggressive target price of 1,567. They have a buy. They say that M&M is now going through a golden period. They have multiple new launches in the SUV space. Their market share has gone up as well. It now stands at 16% in the overall utility vehicle space. In just the last 6 months, because of some big bang launches, the market share has risen from 14 to 16%. And they have very strong bookings of over 240,000 units for new SUVs. And they have multiple new SUVs planned over the next 12 months. In fact, we had a chance to speak to Ramdev Agarwal of Motilal Oswal, and he said that the big positive about M&M is that they're cleaning up all of their legacy businesses. So let's listen into what he had to say.
The company is very in a determined way that they are cleaning up all the portfolios of the legacy businesses and building up on the EV cycle. So it looks very exciting, and the current CEO is completely on top of it. So it's they're not able to produce enough to meet the market demand. This is what the market looks for. 25, 30, 40% growth, at least in next 4-5 quarters. So that's what I think. There is a growth bonanza here, and I think market will remain. I would think at 18-19 P multiple. I think it looks a good stock, good story to pursue for next 2-3 years.
Okay, all right. Ramdev believes it's a good story to pursue for the next 2 to 3 years. Deepak, what's your view? One of the big outperformers this year, out of nowhere, that rally which started from around 800 rupees all the way to around 1300 rupees. At 1300, what's the view?
Sorry, which stock was this?
Mahindra and Mahindra.
Mahindra and Mahindra. Although we own it, so very happy about it. But, two things in the middle that came in. I think the scale here came from, their releases and the launches actually kind of were heavily booked. We're seeing a lot more demand in the space that Mahindra is very popular in, which is the SUV / entry level to mid-level SUV spaces. We're also seeing, in general, the other parts of the business, which is either the agricultural machinery, the industrial machinery, and their ownership in a bunch of other companies as well, starting to do well on the back of the market. So I think certain valuation metrics around holding companies have also changed in general in the market. So that's probably added to it. We own it, very positive about it longer term, maybe slightly reasonably valued right now. I don't know if there's that much opportunity in the short term, but I think long term, this is going to be a significantly larger company, perhaps because of its holding in other companies more than the core M&M business itself, and from perhaps electric initiatives coming forward.
No, absolutely, Mahindra. I think it still would be one of the cheapest large auto OEM name. Used to be, high single digits to about 10, 11 times before the move started. I'm not sure where it is now based on forward multiples, etc. But Fed, would be at the lower end as compared to others in that space. Just a quick word, Deepak, if you will, on Fortis. This is, the management was with us, I think, on the 13th of September, which is early last week, said that IHH open offer decision should be out anytime now. Basically, and the speculation is rife that the judgment has been reserved for over a year. And this will set the ball rolling on that open offer and further integration, etc. Any thoughts here? Do you own it? Or is it one of those names like the restaurant company that you would like to own?
No, it isn't actually, because of this whole open offer and the court case and all of that business. So once this is over, there will still be a process of discovery after then open offer about anything else that might have gone wrong inside of the business that will come out to us. Typically after, so I think here we'll end up with a bunch of factors that we aren't aware of right now, and therefore, while I like the hospital space in general, I find it's a little richly valued for me, despite COVID, and I think COVID is a negative factor, because the kind of economics you got in COVID, you will not get in the coming years going forward. They'll have to cut prices for one, and you will not get the same kind of push up, at least in part of the hospital business. So I think I'll wait here for everything to evolve. And plus the open offer, they've been telling us for so much time that it's going to happen. And so I think in this case, let's just wait for it to actually happen before we take a call on this.
By the way, the stock of the moment is Dish TV. Just pull out the stock. It's hit circuit, upper circuit, that is. Jawahar Goyal has actually resigned from the board of directors. I think this is massive news for Dish TV shareholders. This is official BSC intimation that Mr. Jawahar Goyal. Remember, there was this dispute between the shareholders and Jawahar Goyal in terms of relinquishing the control of the company, and now I think there is news that Jawahar Goyal is resigning. So I think that obviously is something, because in the entire group, previously you had seen with SL Propack as well, and the market wanted the family to go out, and after that you saw that stock do well. There's Dish TV. Jawahar Goyal has resigned from the board, and that stock is up about 10%. Deepak, have you tracked it? What's your view here?
Yeah, I think Z and Dish, Anuj, we don't own them, but the problem really is the promoter. In Z at least, there was a transition to Sony. In Dish, there was other issues that were happening. The company is not very profitable. In fact, it just earns pockets and pockets of profit, and then has a bunch of exceptional losses in it. The accounts have, glaring irregularities that we had seen in the past. We were not very happy with them in the past. And in general, I don't find the DTH business quite as exciting as perhaps I used to, because of the advent of more internet-driven last mile delivery compared to DTH. But having said that, I haven't seen any opportunity here. The promoter relinquishing position is probably a good thing for the company, but it's more a relief than anything else, because the core fundamental questions are still unanswered about how this company is going to get to turn to reasonable profitability.
All right, for now the stocks on upper circuit.